regulatory rundown, changing rules, and the implications on BFSI. Coping with the new regulatory changes imposes high complexities and stringent timelines upon financial institutions. This panel will discuss the impact and the challenges. Can I request CIO Mahindra Finance, Mr. Guru Raj Rao on stage, please? Ms. Sujata Mohan, Head, Digital and New Initiatives, RBL Bank, on stage, ma'am. Bharat Panchal, Senior VP and Head, Risk Management, NPCI. Sanjay Padmakar Narkar, CTO, IDFC First Bank. Prahlad Giri, Deputy Director, Nepal Rashtra Bank, Central Bank of Nepal. Milind Kulkarni, CIO, STT Global Data Centers India. And our moderator, partner and fintech leader, PwC India, Mr. Vivek Belgavi on stage, please. All right, sir, all yours.
Good afternoon, everyone. I know it's been a pretty packed morning. We'll try to keep it short and tight and sweet, right? So ensure that everyone has a point of view, but will not take a lot more than what you would need to be here for. So the topic that we have in front of us today is really kind of a regulatory rundown. Don't want to steal Sanjay's thunder, but he was showing me a list of regulatory changes his bank has gone through in recent times. It's not a short list, right? So, but probably what we'll try to achieve in this conversation today, and we've got a very nice mix of panel coming from different perspectives, is we'll try to pick up, we don't have too much time, but we'll try to pick up one or two themes per person and just talk through what is the change that we are seeing from the regulatory end, what is happening right now, and probably a little bit of crystal ball gazing on what are the few things that we can expect or where is the trend moving towards. Secondly, all of us are practitioners here, so what are the best practices? What are our lessons learned, right? So what are the solutions which have really worked? What are the approaches which have really worked? I think those are the 2-3 themes we wish to touch upon in our conversation today. Sanjay, since you have been quite prepared, probably I'll start with you. We'll go along and we'll come back. Your introductory, we'll do quick couple of minutes of introductory comments from every side. In your view on regulatory rundown, what are the top 2-3 things which come to your mind?
Thank you. I think, last 2-3 years, we have seen a lot of regulatory requirements, coming through, at least particularly for the banks. And this is not only regulatory requirement from data secrecy perspective, but also the data analytics, which Reserve Bank of India expects in many areas. Frequency is also getting changed. Some of the quarter frequencies has come down to monthly frequencies, has come down to maybe weekly frequencies. A lot of changes are happening. Other thing is that some of the future changes are also happening where the things are not yet clear, like GDPR or the bill which is still awaited, and what requires to be done towards that. So some regulatory requirements, though they are declared, they are yet not completely articulated that the way in which bank requires to take care of. So many banks, including our bank also, we are trying to take help of some consultants, what has happened in Europe, and we are trying to look at those changes. And those changes are actually impacting many are BAU stuff. There is no methodology by which you can say that this is the best methodology, because at times the changes are expected to be rolled out in 90 days. One of the new change which has come, and we need to be ready on 1st of April is something which is related to, again, the credit side of corporate, where the WCDL loans required to be configured in 40-60%, and no clarification, people are just grappling with. So huge kind of thrust is also happening on cyber. There is a SWIFT which in between came with a big way. Also because of the Bangladesh happening or PNB fraud happening, a lot of changes in operations, process, procedures, data, compliance for that matter. So it's a long list, as you rightly said, in last 3 years. But yes, I think, I mean, it is moving towards a direction where probably, a lot of automation is happening. More than that, I mean, the data which is going to the regulator is also allowing them to control much better. That's what my, I mean, personal feel is. And in coming years, probably that's the way to go for. Unless and until, I mean, the data is not properly controlled and analyzed by controllers, I think, I mean, otherwise, I mean, the things will lose apart. I mean, that's what my take.
Fair point. Sujata, if you want to touch upon top couple, probably payments is something which you've been working on quite a bit. So any of the top couple of issues from your perspective?
Yeah. So I think regulations have been keeping us busy for the last 2 years in the payment space especially. And I think it goes back to the fundamental vision that RBI first laid out in terms of what they want to do on the payment side. So if you see the way the regulations have spanned, it is exactly in line with the vision of saying that I want to create a larger network, I want to reduce cost, I want safety, so they had put out 5 C's. They said convergence, coverage, confidence, and then last if not the least, the data security aspect. And what I have watched is that they have, at regular intervals, followed that pattern over a period of time. So is it required? Of course it is required, because I think India is slowly moving extremely fast towards a digitized economy. We do say that India is still very cash-led, but I'm very hopeful that, as practices change, as people start adopting newer methods of making payments, etc., when the penetration happens, we will need better controls. What really is becoming a challenge for most of us is eventually the speed at which these regulations are hitting us. The implementation strategy is not fully ironed out, or the typical thing about payments is it goes through so many hands. Typically, there are 5 to 6 players for any payment transaction to get completed, and for us to have all these aspects covered properly requires. I mean, imagine the entire legal framework actually starts requiring revamping basis what regulations come into play. So I think that's been the larger challenge. What is happening is perhaps right, but the speed and the coverage and the implementation strategy is turning out to be a challenge. That's how I see it.
Thanks, Sujata. Guru?
From an NBFC standpoint, the last 2-3 years have been extremely eventful. Starting with, say, the demonetization. I mean, overnight, a company which collects 65% of its collections in repayment collections in cash, you are told to put in controls, you are told to, bring in changes across 1,500 locations. That was the first big impact. Then there were impacts on the GST, where you have every month, I mean, hundreds of returns going. You have, across the states, across the various, concepts. You have the changes on accounting standards, right from the Ind AS to the norms on provisioning. And in addition to that, of course, you have the customer-related ones on, KYC, the Aadhaar, the CKYC, and also, trying to get into AML. So many changes having come together at, in such a short span. It's been a very eventful period. Sometimes I jokingly say that, regulations help the employment generation in technology. So a lot of work keeps getting added, and there is a lot of thinking that needs to happen. But technology also leads to further regulations, new technology, new, technology providers, and those also lead to new regulations, because you need to cover those usages, to protect the customers, to protect the industry, and ensure that there is enough safety in the economy. And that's where regulations are extremely critical. And so we will keep seeing these changes, and we'll have to keep, adjusting to those changes. So that's a pretty big challenge, but interesting one.
Very nice. Bharat, probably to switch to you, you can bring it at a different lens also, from NPCI perspective. And you also at the same time engage a lot with the industry. So from your vantage point, what are the top couple of trends on the regulatory change that you're seeing and what to expect?
So, last one decade, we all have seen a transformation, and last 5 years is really phenomenal. And therefore, when transformation happen, you need to have some speed breaker short of these, and that's what we have seen. But somehow I believe that we are not ready to change our mindset because regulation and compliance requirement are very much needed to, run your business smoothly and safely. If you see when there was a mandate about EMV chip migration, probably we were under the impression that RBI will continue to extend, extend, and extend. They did not. They came out with the EMV acceptance at the ATM. They did not. They came out with a data localization. There's the biggest move which we all have witnessed. So, there is a need of this kind of change because the certain risk which we foresee are already apparent that we may face those risks sometime, maybe today or tomorrow. And regulators are always wise that they're looking much beyond what we can think of. So this all are accepted, and we have to accept with pinch of salt that yes, while we are in the business, we have to meet the compliance and risk requirement. Somehow, the biggest part which has emerged from the regulatory and compliance perspective is the cyber risk, which is very, very, touchy to each and every business. I'm not talking about the banking or financial sector, but it's everywhere. We are witness to a couple of disasters happen because of cyber. I think that's the area where a lot of focus has gone, and, the major movement has happened in the last 2 years. One, the RBI has come out with the cybersecurity framework, but at the same time, the other regulator also, those who were not those, stringent on cybersecurity risk and related compliance, like TRA has come out with their own, requirements. SEBI has come out with the cyber risk framework, and that is for, for every industry. So, today the comprehensive risk framework, if we see, cyber and related risks, which are very, very dynamic, and risk parlance, and we as a risk professional, we have to, and we have accepted that certain things are unknown. So, and we must tell with the pride that some of the things which has happened in our country is nowhere available in the world. So, we have not experienced, there's no benchmark. If there's a card and, online banking and so on and so forth, we have a benchmark. We can go and get from Visa, Master, or the world of American Express and Discover and all this. But what about UPI? What about IMPS? These are the benchmark which ourselves are setting. So for that, we have to move very, very cautiously. And that's what exactly regulator is doing. Because we don't know what can go wrong, and that is the unknown area. So while the product and new services and new transformation are coming in place, same time regulators are also equally worried, and they are going very, very cautiously just to experiment and then come out with the regulation.
Fair points. Prahlad, so coming from Nepal and also in the Indian subcontinent, the markets are very similar. But what, from a regulatory perspective, do you think would be and you really come from the regulator side, so what are the top 2-3 things that you are looking at from the industry?
Essentially, I think there has to be a governance of IT enterprises framework. That frameworks need to be developed in industry. The regulators wants to see the balanced kind of approach to be taken by all the industry sectors, especially when there is a technically complexities. Those frameworks will enable these problems, solving the problems. I mean to say that. On the other part, I would say there has to be a kind of review on the operating model, a kind of, I would say, the assessment in the operating model that's being operated by the industry, so banks or financial services and insurance companies themselves. There has to be a periodical review on the side of the technical advancements, whatever there is particularly I would say the adaptation of the regulatory issues, so that the regulators will be able to know where there is a gap and how to take the appropriate actions on that part. And most essentially, I would like to focus on my country's side, because we have very low penetration of financial services linked with the formal financial services, I would say, with the people. Only 45% of out of total population is linked to the formal financial services. Financial inclusivity need to be in line with the technical advancement. There are two things we need to see. Fintech innovations and the technical advancements, by the way, it's a supply side issues. where is how the people are taking. I mean, that's the demand side issues. So we're only, I think, talking about the fintech issues and innovations from the supply side. What about the demand side issues? That need to be taken into consideration, because central bank, by and large, see the people, taking the people in the forefront of development. So I need
That's a very,
to
very
focus on
important
this.
point. Thank you, sir.
Thank you.
Milan?
Yeah, I think if I think from other perspective, because we are the provider of the service and we are into data center co-location business, if I look at two major areas, one is rightly mentioned by Sanjay, from a data governance, data protection, data monitoring, data measurement, data control, data processing. I think it is going to be very key for us as we go along, and that challenge, how to solve, is very important. And the second important aspect is technology is going to run very fast. Technology is going to change very fast. How we as an organization will adopt to that, and how we'll ensure that, along with that, having a regulatory and compliance framework, which is put in by the government, will be a classical situation to think through. And best way is to step back and look at something from not only from systems or application layer perspective in architectural part of it, but also sometimes looking at the infra layer part of it, which will give us a combination of colo and public cloud combination. And that is where I think we come as a sweet spot for us, and moving forward it helps.
Sure. Thanks, Milan. So if I kind of look at the broad themes that we discussed right now, I sense there's some common threads coming out, right? So one is, there's definitely an accelerating pace of change. B is, we are more and more getting into kind of uncharted territory, right? So which is where one has to be a lot more cautious as to how to respond to it. And the third is also, I think the time to response is also probably becoming tighter and tighter, right, across the board. So probably two thoughts for the panel, and I'll invite the panel to come in and really give your point of view on this, right. First is on the principle itself, and Bharat, probably I'll take your example and build on it, which is, you did mention speed breakers, right. So what I was thinking was, do we need speed breakers or do we need fast lanes, right? So you can have fast lanes, the trains can run very fast, but they are safe because they're running on lanes. They don't have speed breakers per se. But in some cases, we might need speed breakers, right? So just the principal debate a little bit on saying what kind of regulations will help where is one thought, which I think as an audience, it will really help us grasp where the direction will move to. The second is with regard to the framework of response, right? So if you can link up to your own stories of, let's say, happy stories, right? So we know there are a lot of tragic stories in regulatory compliance where it is like the deadline to meet is 31st of March, and by 29th we are doing UAT and stuff like that. But are there any emerging technology themes or methods or models which will help us respond to some of these regulations a lot more faster and better as we move on, right? So two-part question for the panel, if we can all reflect and respond on it. You can pick up any one or two of these questions to respond on.
So maybe from bank perspective, what requires is that, I think, regulators definitely, they think from a long-term and a control aspect perspective point of view. But the readiness and the awareness of the customer, whether it is a corporate customer or whether it is a retail customer, is also important. Suddenly, because you want to tighten the KYC norms, you introduce some 4 or 5 fields, so there is a huge cascading impact which is happening. But at the same time, the ground level people, those who are working, for acquiring a customer or getting onboarded, or even for a loan perspective, they are not aware of. And even the customer is not aware of for what. Many times, those things are being asked, why you are asking for it. So it is not the question of, only the technology probably requires to move fast, but also the education part on the other hand. Whatever the changes which we are asking for, probably, it is important, some awareness program also requires to be run by the regulators. There are few ads I can see from Reserve Bank of India, but that is only from the security perspective point of view. But if, from the KYC perspective or any other perspective, so that is one part of it. The second part, probably the important is that, all these things are moving so fast, and everything is actually, the solutioning is getting around how do you do your efficiently the data management as such, in a secured fashion, on top of that, being security. So these two challenges are actually putting a lot of pressure on both on infrastructure and also running the solution as such. So there should be, I think, one of the presentation we saw that community cloud probably can be a better answer, where probably the banks coming together and then at least the banks, maybe any financial institutions coming together and rather the data exchange, as what Sujata said, in the payment, there are 2-3 hops which are there, at least a minimum 4 to 5. So we actually need to look at from the more practical perspective point of view. Everybody is taking the regulation and the impact of that in isolation, what it means for me. But in totality, if you really look at the entire chain of action, then probably it will make far more sense, even to design the solutions, to define boundaries or to chain data, control the data, or consortium coming forward for community cloud kind of this is what my...
That's a bold thought, yeah. So one doesn't hear too much about communities actually coming together in a competitive business situation, but here probably it is like a common pain, so probably there's a reason to, yeah. Sorry, Sujata.
Yeah, so I personally believe that speed breakers is, you anticipate a speed breaker to an extent. I think fast lanes are difficult in the current world because I think, to be very honest, I think people are running on the fast lane and then we are having jerky brakes. That is the real challenge, because the jerks is what is creating a lot of, difficult situations for us. And when we were just discussing offline, the fact of the matter is that, the demand side, as the other panelists were saying, is that while the supply side is increasing and with startups pumping in money, cashbacks and so on and so forth, people are adopting these changes, but I don't think they really totally get it. So there are people who compromise their passwords, they compromise their OTPs, they compromise everything and actually start creating problems in the system. So I think a controlled movement forward is obviously very, very necessary. And I'm specifically, on the payment side, I feel that it's time all the participants in the industry come together for having a common fraud monitoring and technology to be there, and where again the community role will play a big role. The reason is that, the credit quality just went up by the fact that there is a credit bureau, right? And today we are investing further to create the credit registry. I think for AML performance, for being able to catch frauds, to be able to do those tightening of certain aspects which results in payment derailments, I think it's very important that we all participants get together and create a common infrastructure which will help us monitor transactions. I am a big, and on the other hand, what we have landed up doing is that whatever are our enablers, we are kind of pulling it back because we've possibly not thought through the landmine that we can get through. And I think the fact that Aadhaar got pulled back, it was such a big enabler, was because there were some landmines which we didn't kind of estimate. And this comes out of the fact that we kind of underestimate the creativity of the last mile Indians, They're quite capable of doing quite a few things. So I think if we were to kind of solve two kinds of problems, one is to have a common community approach to authentication and also solve the problem of frauds, I think then we can run a fast lane train, which can run at a bullet speed, is how I see it.
Excellent, yeah. Excellent. Quick commentary. There was an initiative, a community initiative to create an op-risk database across all. Is that just, I'm not sure anyone is...
I think we have to put together that as one of our, while Madhi was speaking, I was thinking about it, that maybe, this is something we should look at. Trade is of course a business initiative, but really to make banking safe, possibly we could invest in fraud, that's something I was thinking.
Excellent. Bharat, you were going to say?
Well, so speed breaker has become very famous word now during the panel discussion. But let me change the track. When you go to Bombay-Pune highway, and there is a barricade, the net is kept to both the side. That is what is exactly the problem what we are facing today in the ecosystem. Because I run the ecosystem, so I'll talk from that perspective. See, when we foresee there is a problem and there is some lacuna or some vulnerability need to be fixed immediately. Now the biggest challenge is that we have to take every player at the same time in coordinated way to fix that gap at the same time. With all due respect to big banks, they take time because, oh, we are too big to implement this change. The small bank, we are too small, what is going to happen to us? And because of this kind of attitude, we are failing miserably. Because if in today's world, one minor vulnerability can make havoc in the system, because your ATM is not belongs to your customer. Your app is not only to your customer. You are serving as a requirer to multiple million customer of entire banking industry. And that's where the coordinated effort does not come, and that is what is creating the problem. Second, it is not limiting to the one industry per se. Because if there is some problem in system or the onboarding process of the telco, that impact directly to bank. Because see, one fellow selling a SIM card in 150 rupees, blank SIM card, which is being used for committing a fraud in banking industry, who is losing money? It's not telco, it's not the operator or the guy who has sold the SIM card, but the innocent guy somewhere, some part of this country who has lost his money because of the digital revolution. That's the biggest problem today which we are facing. And if we do not come in coordinated way where people need to take things seriously, and we have to see from the ecosystem holistically. We cannot confine to only my bank, my customer. No, the whole ecosystem is your customer. So look at from that angle. There's a need of changing the mentality. The second you said about the community service sort of operational risk and fraud risk. I think today, in my 8-9 year journey in NPCI, at least I can say with a lot of pride that NPCI has become one of the most trusted agency where you all can come and give your data if you are facing any problem. Many of you might have just now seen a WhatsApp message coming from RBI, one alert has come yesterday about any risk. How to control this kind of issues, because customers are allowing someone to install remotely an application called AnyDesk or TeamViewer or sort of thing, and they're happily giving complete access to the fraudster somewhere sitting somewhere part of the world, and we are losing money because we are getting complete access, right? In this kind of thing, if NPCI is being reported that yes, there is something is happening, please come forward, report to NPCI. We have all the connects across the country. We have all the connect with all law and enforcement, all banks, and we have real-time monitoring tool in place for community, which we are running successfully since last 6 years. Now we have invested further on, everyone is talking about machine learning and AI and all this. We have actually implemented. We are going live in maybe April or May, where we will serve to all the banks. But the biggest challenge for me is that banks are not coming forward and reporting the frauds. Because, of course, there are reputation issues and things like that. And one different phenomena is that, oh, we have insurance, we'll get it covered through insurance. Okay, you are serving to your customer, you are not serving to your community. Because by which you are confining that problem within your bank, it is not getting out, and because of this kind of attitude, the ecosystem is not getting benefited. My request is if all banks and all institutions come together and report to an agency like NPCI, and even RBI also become very, very active today. CSIT and the DPSS and all this department become very, very active in terms of fraud management. So
Bharat, sorry to interrupt, but probably just to elevate the conversation, like payment fraud is one leg where NPCI is involved. Yeah. But if you see from a holistic perspective, that's why I asked for the op risk database almost, right? So there could be other types of fraud, employee-initiated fraud, so on and so forth. What you're saying is absolutely right. So somewhere the Fastlane community fraud, etc., is a different challenge altogether, right? Because everything is happening instantaneously. Yes. But the size of loans and challenges we are seeing, we've recently seen what the
number of frauds are high where the ticket size is low.
Correct, yes. Correct. So probably we need a balance. Sorry.
We can take a lesson from the IT industry where you do have a database of IT professionals, with their backgrounds. So similarly, we could have for the BFSI sector as well with regard to operational risks. It's not that, it's going to be complete, but there will be at least a starting point, and we can always keep making improvements on that. And with regard to Fastlane, frankly, I had another analogy there. There was an automobile engineer who said, do you know what's the function of a brake, a good brake in an automobile? A good brake in the automobile allows you to go fast. Because you have full faith in the brake. Okay, So that's why you need good regulation,
Excellent.
strong regulation.
Excellent analogy. Excellent. Brother, just to move to you, you want to weigh in on this debate?
Definitely, it's my own views on the on this security side. There has to be a proper coordination with all the stakeholders, especially with the industry and with the regulators as well in this regard. In Nepal, we have a mandatory requirements for the banks, financial services, and insurance to spend some amount on the corporate social responsibility, for the awareness, and for the financial literacy, etc. And they come forward with the plans, kind of initiatives together to address the vulnerabilities, especially.
But Prasad, just a challenge to that. If whenever I seen this initiative being passed, every bank will take an initiative, but everyone will probably put a boarding in the same neighborhood, right? At some level, you would want a greater spread in the country as well. So probably the community idea was, would it make sense for whatever CSR money you're spending, pool it in a central place, run a central literacy? Would that kind of an evolution make any sense?
Yeah, obviously that makes a sense. We have already applied these to our different states in Nepal. Definitely, there has to be a curriculum, there is a strategic plan in regard to impart what the problems and vulnerabilities is there. I mean, how to address is there. And regulators need to be in quite coordination with all the industry people, I think so. We have already applied that successfully in Nepal.
Fair point. We have limited time, but I'll take last couple of minutes, Milind, probably for you to come in and any other last thoughts on what solutions seems to be working and where's the trend. We touched a little bit on AI and ML in fraud space that Bharat you touched upon.
I'm just going to quote something. Too much regulations, if we talk about the free economy or free kind of market, there is to be things. If you have too much of regulation, if you have too much of controls over the system, over the architecture, the innovations like this technical advancement, something will not go as it is expected. So my thing is that since we have seen in Nepal, we have also some hue and cry in the market that now there is a big AML compliance coming up, this and that, controls over the KYC update, STR reporting, STTR reporting, since what's happening? People don't the banks to deposit their money. So what will happen? There will always be a liquidity crunch. So this is hue and cry is there. But at the same time, we see at the kind of risk-based kind of things to apply on that part.
Fair. Very point.
I think if I had to look at, I'll divide into three perspectives on this. First important one is, as I mentioned earlier, we have to not only look for this regulation as a challenge, we have to look for a business value creation aspect of it. And I'll give example of that, applying analogy to my environment, because we are co-location providers to customers like you. And if I have to apply that, I'm looking at from three perspectives. First one is where we will typically have a hybrid cloud kind of environments, and as you rightly mentioned, we will have community platforms to work with, but we have to also ensure that some of the core banking software, some of the core systems which are required for the banking, we need to have control on that. That is where providers like us give you a co-location place where you are holding your servers, you are holding your data, you are managing those things. But the efficiencies of scale, which is helping you to reduce your cost. To give example, if your power bills could be lesser than 30%, your operations support cost could be lesser than 30 to 40%. If you're managing on your own. And that is where you look at, even if you are having a control on your environment, the way you are looking at from regulation and compliance perspective, but still you are managing it and getting the benefit from a value perspective, that is where you are getting more efficiency and the cost aspect of it. So those are the two things which we should balance it out as we go along. And when we have to take a step back and look at our holistically the architecture aspect of it, while we are having AI, ML, bots, RPAs, and whatever classical technologies which in few months down the line, and it will change every weeks or every months, how we can step back and look at this co-location and infrastructure environment, how we can effectively use it so that we can balance it out from a efficiency and value creation perspective. That is my view on take on this.
Understood. So scale does help in
scale,
some
efficiency,
cases.
time to
Point
market,
taken.
absolutely.
Okay. Any other thoughts, last thoughts on Guru, on solutions which have really worked per se?
I would only say that, I mean, there is no, like Mr. Pradeep was saying with regard to the market players, free market versus the regulations. Okay, this is a philosophical question. Would you allow the players to be creative, or will you regulate them too much? So it's a debate which needs to go on, and it's a never-ending exercise. Regulations are necessary for the long-term survival of the industry and the benefit of the end customers. And we, as technology guys, have to keep on chasing those regulations and executing them. So there's nothing, there's no way to do this better, I guess, right now.
So probably concluding thoughts, I'll just weigh in on 2-3 points which we didn't have enough time to cover. But based on at least my experience in this space and what I've seen globally happening, there are 2 other points which could support what we spoke about. One is the whole idea of sandboxes. So in India, at a regulatory, and I think a journey has started, but many of us not sure where we are in that journey. But I would almost argue that there's also need to have a sandbox within our environment where one would, and it's a tough thing to tell to this community here because there's already 10 things to do and you're adding one more. But having said that, there's some merit in thinking through that lens. The second story is also, I believe, on data maturity curve. Having again worked in the industry, I'm not sure of how many financial institutions in India I would rate 5 out of 5 in terms of consolidated data maturity, right? So whether you have a data architecture which covers your regulatory needs as well as business needs together. So like some of those core infra basic issues are where I feel they're not basic per se because each of them is a pretty massive journey that one has to undertake. But probably if I'm taking a 5-year lens, having that sorted out would be some of the things that you can keep in mind. That's all. I think we have run out of time. Probably we could have time for 1 or 2 questions if our organizers are fine with it. Otherwise, we can wrap this up.
Yeah, hi. Good afternoon. My name is Krishna. I belong to a company which is called 10X Financial Solutions. So now, of late, there has been a contradiction between RBI and central government on various issues. Not only in India, but also
Can you come to the question very quickly? If you give us time, we can take 1 or 2 more questions.
Yeah, no, bro. So what should be the, right way to go ahead about, regulating financial industry from the RBI perspective as well as the government perspective, And so what should be the right and suitable way to go along way ahead? In terms of
I think I got your question. We covered some of that in a panel discussion, but if anyone wants to summarize a couple of points, otherwise, Sanjay?
I think, going ahead, definitely, the coordination is the biggest issue, probably, which we did not get a time to discuss. But yes, if one agency, is also going to have impact of the change and the involvement of the another agency, then definitely it makes sense from both those agencies to first rather be clear about what role will be played by whom, and then probably give the directions. I agree with you that in few of the occasions, this has not properly coordinated. But I think, now at least going further with those 2-3 examples which happened in past, we see that, that's happening. Some directions are coming pretty clear way that, if you have to involve UIDAI and also for that matter, the RBI requirements and all, so things are getting sorted out. That's my take.
I can just add one point here. I think for BFSI industry also you have to look for what will be the co-creation approach. I'm relating the analogy with telecom players or other players where you share bandwidths, you share resources, you share what your best possible infrastructure or resources which gives you efficiency and which gives you even in the regulatory environment to manage it. Maybe you have to learn certain things and see what best we could implement into a BFSI industry and co-create and live together and make money out of that as a business.
We are done for now. So thank you so much. I think this was an interesting panel discussion for sure. We covered some interesting angles. Time was short, but I think if the panelists are around, feel free to engage with them. Thank you so much. Have a good rest of the day.